Mr. RamaKrishnan, or Ramki as the financial markets know him, has been practicing Elliott wave analysis for 3 decades now. He is one of the most widely followed wave analysts in the world. So let's have a huge round of applause for Mr. Ramki.
Thank you. Good afternoon. It's a great pleasure and honor to be in front of you today. And I have to thank Sushil Kedia for this honor, and to each and every one of you, because you feel good when a lot of people come to you and express their appreciation of the work you've done. You can't hear me? Is it better? I'll try and speak up. Can I have the other mic as well, please? Thank you. Is this better? Hello? Is this better? Not this. Almost same. I prefer not to have two devices in my hand. All right. Let's try for 10 minutes. If you're still unhappy, I'll come back to this. Okay, let me start by asking for a show of hands. Who all here do not think Elliott waves work? Great, you're in good company, because the first slide I'm going to show you. Yeah. Next is down. You're in good company because this guy, Michael Cowell, is one of the famous turtle traders. Many years back, a guy called Dennis Richards, I think. He conducted a program for about 23 people, wanting to train them to become good traders. And he is one of those traders who became very successful. And he says that Elliott wave is junk. So I applaud you because you belong to his camp. According to his blog, which he calls Elliott wave junk, he says that the claim of the Elliott wave analysis is that you count the waves, and once you count the waves, you know how to buy, and when to sell, and take profits and make money. He says the truth is, basing your trades on something so subjective as Elliott waves, where, as all of you know, we keep changing our counts and it becomes very subjective. I might think one thing, Rohit here might think something else of the same waves. Is useless. And the last line is even more interesting, and is probably true. If you see something for a long time, you will imagine a new pattern. In fact, in some of my writings I tell, look, today it's looking like a triangle. I'm fairly certain that next week it's going to be something else. But you can say the same thing is why Elliott wave will fail, but I think differently. Being aware that this pattern could change gives me an edge. So it's how you look at things. But going one more step, he concludes that as a trading approach, you cannot make money with Elliott waves. So that's one extreme, to call it a useless approach. Let me introduce to another guy, Ted Aguhob. I don't know this man. Okay. Out of the blue, I got an email, okay, asking me some questions, and then I believe he called me the 5th best analyst in the world. Technical analyst, Elliott wave analyst, the 5th best. He has got a ranking system, and he ranked me number 5. He calls himself the wave genius because, by his own count, he is the best Elliott wave analyst in the world. He says he makes real money day trading, and he keeps selling stock alerts. I don't know what he charges, but he says 90.4% profitable verified, and he is a master of charting. Look no further, I'm the best. Naturally, if you ask him, he will say, there's nothing better than Elliott waves. Right? He's the other extreme. The truth is somewhere in between. You can't say it's useless. You cannot say that's God's given gift to me, I'm the best. So whatever I say will happen. Now, how many of you here, tell me honestly, do you have a secret method which you haven't told others and you're making money regularly? You have a method. Please, Sushil, you must tell me that secret. Because, yeah. Well, you're saying that, like Ted Alhob, who has a 90% profitability record. If you say something, especially if you say it on the web, they'll believe you. The written word is more powerful than the spoken word. Is that right?
I will stick to the spoken word.
Yeah.
Only secret that I worth sharing is
Yeah.
that anybody who promises to share secrets of the markets,
Yeah.
you should just delete their phone number and forget about it.
Well said. Actually, I'm going to show you a slide in a couple of minutes, which is reflecting what Sushil just now said. But some of you might have some methods which you consider secret. Please keep it to yourself, because the moment you tell others, that's no longer a secret, and it may stop working. I published a book, 5 Waves to Financial Freedom, where I told everybody everything I knew about Elliott waves. Because some things work because they work, not because you're the sole proprietor of the knowledge. In any case, if you have the imagination that you somehow can control the market, then you cannot be wrong any further than that, right? So, this guy, Andy Krieger, I was working for, I think I was in National Bank of Kuwait. I worked for several banks. National Bank of Kuwait was where I was working when this person contacted me. He says, Ramki, I've been following you for many years, and I would like you to come and work with me. I run a hedge fund to advise one of the world's wealthiest people. I won't tell you his name. He arranged for my visa, and he took me by first class. My wife and I traveled by first class to meet him, to meet the rich man. And he said, go for a Broadway show. And I went to Switzerland on the way back. Even before I landed, there was a message waiting for me at the hotel saying that this person wants to talk to me again. Anyway, this guy is an ace trader. He made $300 million profit on a single event, where he took the Bank of New Zealand, just like George Soros took the Bank of England for a ride. He took the Bank of New Zealand for a ride. And he made a huge bunch of money. And he has a secret method. And because I worked with him, I will share with you that method. Card trick, you must have seen in YouTube. Especially if you want to impress small children, we show them some tricks, and they'll say, please, can you tell me how to do this? But the moment you explain the secret, then it's no longer fun. The myth is, as long as it's a secret, everybody is interested. Likewise, if I tell you, well, before I tell you, please, have you got any method that has not lost you money? I'm sure every single method you tried has lost you money at some time or other. If there's a person here who has not lost money, I'd like to meet him and shake his hand. I have lost money lots of times. I've been a trader for 25, 30 years. I've lost money so often. Especially when I was younger, I lost a lot of money. But that's how I became a good trader. So, the secret is there is no secret method, including Andy Krieger. If he had a secret method, why would he hire me? But he's a Wharton graduate, and he's worked with George Soros, and he's worked with other big guys, right? And he hired me because I have a method. I would recommend that you master any one method that works for you and get good at it. And you don't have to go and publicize it. If you want to make money by telling others what to do, well, that is one profession, a different profession. Okay? I have a website where I charge people $50. It's a lot of money compared to, for $50 you can get a monthly subscription. Why do I charge $50? Why can't I charge $100? It's just a number. You actually don't have to pay money people to tell you what to do. You can learn it yourself. Why people come to me sometimes is because they want to ask a person whom they think will tell you the truth to verify their methods, or if they think that they don't have the time or the intellectual desire to learn because they are busy with other things, they sometimes come to me and ask me, what do you think? And I charge them for the time and for the specialty. But you don't have to do that. You can master any method. Elliott Wave method is a good method. I'll speak about it now. But to succeed, you just need any one method. And be sure, even before you start, that you will have a lot of failures. How we manage the failures along with the successes is what makes us wealthy or not. I pressed too quickly. This is a slide I want to show, what Sushil said. It's something I picked up from the web. Pay what you want to pay. I'll give you 40 secrets, the ultimate secrets to earning big money in the stock market. Purchase now at your price. This is an ad in the web. All right? Please don't fall for such advertisements. Terms and conditions apply. I'm sure it says that if you lose money, it's not his problem. The next one. Whenever you trade the stock markets, there are just three outcomes. We know that. It's not a secret. It can go up, it can go down, or it can stay flat for a long period of time. But, can you hear me? I can switch to the other mic. Okay. If I hold that device, then I cannot swing my other hand. Hello? Which of these three things is likely to happen? If you can determine that with your method, then you have an edge. I'm sorry, if you can move to the front. I can't hold this and speak. Elliott Wave gives you an edge also. The Elliott Wave edge, you just have to learn a few things. 3 simple rules, a few guidelines. Some of the guidelines which you think you're seeing, as if you're following, may not actually be there. You might be seeing some of the pictures which when you look at a pattern, you think you see a pattern. So maybe you think, okay, that book said this is the guideline, and you think you're applying the guideline, may not be applicable there. But you gain experience over time to identify what is happening. But you need to know what those guidelines are, and you need to understand the personality of some of the waves. If you master these 3 things, then you're well on the way to become profitable. And it's not a very difficult thing to do. It may take you a few months of practice, and after that, you don't need to pay any money to anybody. You'll be good. You'll be doing it yourself. Maybe you can become a guru and put up your ad saying, you can charge me, you can give me $25 and I'll give you advice. You can do that after some time. But by learning this method, the Elliott Wave method, you will stop making many of the mistakes you're currently doing. And that's the idea of this seminar. I'm not going to teach you Elliott Waves, but I'm going to share with you some of my thoughts to present to you how people are misled by what they see in the internet, by the flood of advice they get from all kinds of people. Some of them may not be true, some of them may just be that single person's interpretation. Just like I'm giving you my opinion, you can judge for yourself whether I'm being truthful or not. But I think at the end of this hour, you'll go away with a lot better idea of what Elliott Waves is all about. So, the Elliott Wave strategy, it goes like this. You look at the charts, the big picture, and you decide where are we in the cycle. How many of you have read something about Elliott Waves before? Please. Most of you, right? So when I say, you know what a cycle is, it's of 8 waves. 5 waves up and 3 waves down, that's one cycle. So where are we in that cycle? That's the first question you need to answer. Once you know that, you're already 50% of the way, towards achieving your goal. Once you know that, you ask yourself, what's the next move? Is it going to go up, down, or sideways? The first of the three questions. If you are in the third wave, for example, if you think you are in the third wave, it can only go this direction. Chances are very high it's going to go up. Or if you are in the beginning of a complex correction, about a week back, there was an interview in CNBC where I was fortunate to be interviewed, again, thanks to Sushil's introductions. And they asked me, where do you think Nifty is going? And I said, it'll go up to 9135, then come down to 8080, but wait for 8080 and then buy. As you know, it never went to 9135 again, but it's coming towards 8080. The direction, knowing the direction means not knowing, if you're a day trader, the next move is important, right? Then you look at the smaller waves. If you're looking for a move to 9,600 or 11,200, the targets, then you will have to take a position at 8080 or somewhere there. So where is the direction in the bigger picture and where is the direction in the near term? You should know that. That depends on which level of waves you are analyzing. Are you looking at a 5-minute chart, or you're looking at a daily chart or a weekly chart? The third one is targets. Once you know where we are and once you know your direction, then you determine where you want to start building your position. At that time when I spoke on the television, I was saying 80-80, so my target was 80-80. I need to be patient till I get to 80-80 before I even start buying any big money, big amount of stocks. I may trade for fun, small amounts, but if I really want to invest for a big move up, I will wait for that level, and even then, I will be looking at the charts again to determine, has anything changed between the time when I first look at it about a week back to now? Now that we are almost at 80-80, should I take a fresh look and come up with the so-called alternative count? We'll look at that later. But the strategy depends on these steps. And once you follow this particular method to all your trading and investing, you are trading sensibly. You're not emotionally trading. You have a method. When you talk of a system, this is one example. A simple toss of a coin. Okay? If you win, you make 10. If you lose, you give up 5. So this system gives you some amount of odds, right? So if you win 4 times, you made 40. And if you lose the remaining number of times, you lost 30, you made money. Keep doing it again and again, you end up very rich. So that's one system. This is a different approach to talking about odds. In a deck of cards, let's say 52 cards, let's say you draw 10 cards, right? And out of the 10 cards, you get 3 kings. What are the odds that from now onwards you'll draw a king again? It is not as big as it was before you drew these 3 kings, right? The probability of drawing a king now out of the remaining 42 cards is much lower than before. It is this kind of a situation when you can take a bet that the next card won't be a king. That's the time you should bet. Really. Not when you had 4 cards in the deck. So, finding out the probability of what's going to happen next and trading then is the edge you want. And Elliott waves gives you that kind of an edge. What is that? Are we in wave 5? If you determine, using the strategy slide which I showed you, where we are, if you think that we are somewhere towards the end of wave 5, you know what's going to happen next, most likely to happen next. There's going to be a big correction, right? Because the next correction is not just going to correct the wave 5, it's going to correct all of the 5 waves up. Knowing that, you would not be buying. So your edge lies in knowing that you should not be trading from the long side. I'm giving you broad guidelines, broad things on how to approach Elliott waves, how to use it to your benefit. If you want to know the nitty-gritty, then you probably want to purchase a good book and read about it. The second thing, alternation. You know, the theory says that if you take two corrections, second wave and fourth wave, if this was simple, the fourth wave will be complex. That's a useful information to have, which those who don't trade using Elliott waves don't have. Because if you look at a sequence or if you look at a chart and you're seeing clearly a big third wave is finished, and the second wave was a simple correction, you will think that the fourth wave is going to be complex. This was exactly the same idea which I had when I gave that interview for NIFTY. I think the same thing applies for the Sensex. Our sponsor here, the BSc, would be pleased to hear that I also speak about the Sensex occasionally. In fact, in my first book, 5 Waves to Financial Freedom, I specifically thanked the BSc because they were very quick in giving me permission to use the charts. Whereas the NIFTY people, the NSC, did not come back for several weeks. So I put these people's name there and thanked them. Anyway, where were we? At the end of the third wave, an extended third wave which NIFTY has seen, you are looking for a complex fourth wave. Knowing that it could go anywhere in a complex fourth wave, it could take any shape, tells you to be very, very careful about how much money you're going to invest. So that gives you an edge which others don't have. I mean, some of you might think, not trading at all is my edge. I save money for my family, right? Why should I go and trade the stock? That's a different thing, yes. Sometimes not being active itself is an edge. You come to that decision because you know that the fourth wave, you're going to get caught, irrespective of what you do, you're probably going to lose money. Why not take the children to the movies? And an extension is another event which allows you to determine, if you've seen an extension already in a 5-wave sequence, let's say the first wave or the third wave, then you know the fifth wave is probably going to be a normal wave. That's an edge, and you can take your bets accordingly. So if you go back to the previous chart, before the kings and all came up, that if you have an edge, that's when you should trade. And that edge you acquire by following the methods that the Elliott wave system gives you. Inspector Clouseau, right? There are clues everywhere. You just have to look for them before you trade. Before you take any position, take 5 minutes off, sit quietly, look at the charts, and see what clues the charts reveal to you. And that way, you'll probably make a much better informed decision on the next move. Now I have some charts to show you. Are you able to see this chart from there? You're able to see. Okay, great. Now, this is an hourly chart. No, this is a daily chart of the NIFTY. And that was the first wave, the second wave, and an extended third wave, right? After I put up this chart, I did this. Oops. This is the first chart. This is the second chart. Here, the first wave, instead of placing it here, I moved it here. The second wave, I put here instead of here. So in the previous chart, I had the first wave here, second wave here, and the third wave there. In this chart, I put the first wave here, second wave here, and third wave there. I'm looking at it, let's say, last week, and I have to decide what to do. It doesn't matter where I place the first and second waves for me now, in this particular chart. This is a deep correction. Wave 2 was a deep correction here. And even if I put the wave 1 here, even this wave is a deep correction of the whole first wave. And it looks to me like a simple second wave. So I decide that it doesn't matter whether I've got the wrong count so far or not. What matters is this is the end of the third wave, because the personality of this wave is clearly like a third wave. Even if the whole thing is ABC, it doesn't matter. The next move is down. So the first decision to do is to tell ourselves that we will not be buying it here. The second thing is, should we sell? And if we sell, are we ready for what's known as an irregular B wave, where it can go back to the top? Like I was telling you the previous time I spoke about the waves. If it goes back to 91.35, will I be able to sustain that rally if I am short at this level? And how far is it going to go down? The targets I mentioned in the other slide. These are the decisions you have to make at that point in time. So there are many occasions where you don't need to have the right wave count to take the position in the market. So if you, next time you read some commentary where it says wave 1 is here, wave 2 is there, wave 5 is here, so many different counts and calculations, step back. That person is doing his job, but what is the essence of the whole thing? Is the next move down or up? And is the principle of alternation, is he taking the right approach or not? As I said, wave 2 was deep in both the counts, hence wave 4 is likely to be shallow. And shallow is what? There are no hard and fast definitions as to what is a shallow measure. I generally place it at between 23.6 and 38.2 is what I would call a shallow correction. If it goes to 50% or 61.8, that's deep. So I did the calculations for both, from here and from here, right? The 23.6% comes at 80.80. That was the target I gave. You could be on CNBC as well. It's no big deal. But the thought process that goes into this analysis is what is important. Now, 80.80, is that going to be the bottom? What will happen if it breaks down to 38.2%? That is still a shallow correction. I normally go back to the minor waves to decide how far it can go, calculating the targets, right? We know that ABC is already over, and the wave C was at 138.2% projection of the wave A, right? And then we had this rally. Observe that the C wave was 138.2, but this is supposed to be a complex correction, and a complex correction can take so many different shapes in the strategy angle, right? So I knew that we made a bottom either at point P or Q, and it's approaching the previous highs with some volume, so I should buy. I bought some stocks. Actually, how many stocks did I buy? 1,500. Look, I've been in the Middle East for many years. I made some money. But I also send my kids to good schools in the US. I'm not Mr. the Bull, right? Not Mr. RJ. I only bought 1,500. But the fact that this belongs in Mr. RJ's portfolio was good enough for me. As it is, he's buying and he's bought big chunks of stocks of this particular company. It says it's going to go up, so let's buy 1,500 shares. At least for the fun of it. So I bought it, and I computed the fifth wave target of 40.82. I knew that some people are very picky about where to sell. They want to take the last cent. I tried that when I was younger, and I missed big moves because I was putting a bid in the dollar yen, let's say at 125.34, and I put my bid at 125.36. It came to 124.40 and went all the way, two big figures. So nowadays I'm wiser. I enter the market or exit the market slightly away. don't want to be the smart guy and miss the move completely. So I sold it at 40.50 and made over 20% in 7 days. That's good enough. There, this is my statement from the broker. You can't see it from there. But it worked. This trade worked. This is another stock, Prakash Industries. You know, some of these names I haven't even heard of. I've been away from India for 25 years now. But I have the list of stocks in Mr. RJ's portfolio. I keep watching it once in a while, you know, because I get an alert if something happens. And I decided to buy Prakash Industries. I don't know how many stocks I bought, but whatever. But I bought it at 43. Okay? And why did I buy it? Well, I don't know what this says. It's I already bought it. Now, let's not talk about why. I have the chart for what I did with it. I had 3 possible targets. So I could leave my take profit order at one of these 3 levels. The first one is the 38.2, which is at 45.52. The second is at 46.68. And the third is at 47.83. So I decided to sell it at 46.15, which is higher than the 38.2, but lower than the 50% projection. Why? Because this 46.53 is also a 23.6% retracement of that move from there to here. From there to here, the bottom. So you have 2 sort of resistances, 2 ways to know where it's going to be resisted. So I sold it off at 46.15, and from there, of course, the market has moved on, and it's probably trading at 39 or wherever. Once you're out of it, I just forget about it. So this is another trade that made money. Why am I showcasing this? Not to show that I am a great stock picker or something. It's just that these are all current events in my portfolio. And when I'm talking about Elliott waves, I'm showing you why I made some decisions, why I bought, and why I sold. Sometimes the market moves too quickly. Kesharam Industries. This is also in the portfolio. Actually, I bought these stocks because I knew I was coming to Bombay. I wanted to trade some of the stocks which are familiar to all of you. That's actually one of the truth, you know. I want to use examples in my presentation which are really live trading examples where I use my methods. So I did 3 or 4 trades from a portfolio which many of you are all familiar with. A 5-wave rally. This could be wave 1, and maybe we are just doing a minor wave 2, and we could have an explosive wave 3. So I bought it. Because if you break the top of this, then I should be grinning, right? I could probably stay at the Oberoi myself and not have Mr. Sushil Kedia so kindly support it. There it is. Funnily enough, sometimes, or quite often actually, when I announce that I'm going to do a trade, I send sometimes emails to people, my clients. Immediately the market moves. There are some big players who get emails, and they maybe the stock was illiquid, it just moved. But in this case, I don't know anything about Kesharam Industries. In fact, I was looking at the spelling on how to spell this name. I just trade because I look at the chart. But within hours of my buying it, the same day, it moved by 9%. I bought it at 133. It was about 144.90. I went for a meeting. I was in the bank. I work for a bank. I'm not a trader. I have dealers. But I sometimes just access the market, put in a trade, and then forget about it. I came back from the meeting, and there I saw it at nearly 145. Wow. But I have, being an NRI is sometimes a disadvantage. I can only trade on delivery basis. I cannot take profits. So it took I have to delivery comes after 2 or 3 working days. And the damn things are coming down, and I'm still holding on to it. So not all your bets work all the time, but you could have made a big, tidy sum of money if you're following the methods. Because I didn't buy for the fun of it. I saw the charts and bought it. I had, there are about 20, 25 stocks in that portfolio which I know Mr. RJ holds. I didn't go and buy it randomly. I looked at what looks promising. And that's what you have to do. If you're doing anything at all, there are so many, in money control sites, so many people are giving you clues. You can do your own analysis and say, which one looks promising of all those analyses, and choose the one which sounds most attractive and trade that if you are comfortable. What I would do with the stock now is to hold on to it. Why? Because I know that it's going to go back up. In the big picture, it certainly looks promising, and I am buying this stock. I don't know at what rate Mr. RJ bought it. This stock or some other stock, it's 70% cheaper than what he bought it. And he's still holding on, so I'm buying it 70% lower than that price. So I should be fine anyway. But there's something more important than all of this. I'll come to it shortly. So what's the lesson in what I've just now told you? The anticipation of what's going to happen and the confidence of what you're going to do. Almost an hour up? Oh dear. I have so much more to. How much time can you give me? I'm only about 40% into my presentation. Okay, I'm going to go faster. What is important so far? It is not that I was able to trade correctly, but my position size. That's very important. Why 1,500 shares only? Because I want to have peace of mind. I know that if it doesn't work, I don't care. This is just one of the many trades I'm doing. I don't want to be Mr. RJ. I want to be Mr. Ramki. Send my kids to good schools. Take my wife out on a good vacation once in a while and be with you guys next time I come and see you. Right? I need to have that much additional income. And having that position size with which I can sleep well is comfortable for me. So choose your position size after you have the edge, and you shouldn't be able to worry. You shouldn't need to worry about your positions at all. Because if this doesn't work, the next one is going to be a big winner. Okay, I'm going to talk faster now. I'm going to skip this portion because we're running out of time. Basically an example of how I gave a consultation opinion to somebody as recently as last week, 24th of April. And this is straight from what I sent to him. Right? And I told him, for the reasons I discussed, I said, don't buy. It's probably going to come at least here, and likelihood of reaching here. And sure enough, the market just gapped, right? On 27th April, the stock just crashed. This is the edge that I want you to have. So, you may not become experts overnight, but it is worth investing the time and effort to learn the framework, because then you will be approaching the market with confidence. Hand signal. This is something which you must give me some 10 minutes. If I want to turn left here, no point showing my hand here, probably like this, right? But some people think that having the right Fibonacci ratio calculations is the answer to their problems. You should use your head. Fibonacci ratios gives you the target, but the framework which you want to use, the strategy, is not just the ratio, the targets, no. It's deciding where you are, the direction, the targets, of course, and then being patient for the level where you want to enter. Work hard. It's down by so much, right? Something happened. So should we buy workout now? Use your head, right? Are you an intraday trader? Maybe yes, because it's just sold in panic. A lot of stop loss orders must have been done. So maybe you can buy it for a very short, quick trade. But if you're an investor looking for a big move up, you have to pick your levels carefully. You'll have to wait for the market to bottom out, find out what went wrong, what is the news. I searched and searched. I asked my broker, why is workout hot by 20%? He says, I'll find out and tell you, sir. I have Reuters in front of me, but I thought maybe you guys heard some rumors. 2 days later, I read that they recalled some of the drugs from the US. So don't just go running and buying something because you have some Fibonacci supports. In such a case, 22% down, whatever numbers you had calculated would have all crashed. So another thing, so in a rapidly falling market, if you don't expect it to turn like that, then you'll get thrown off like that, you know. Have you ever tried turning a car like that? The stock market, when it's falling, it will not just immediately turn and go up. It will turn slowly, there'll be a sideways move, and then it will build a base and then go up. Only occasionally, somebody comes and buys big on the panic selling. Maybe an insider sold it and then bought it. But you don't want to be making money like that. You want to make money in an orderly fashion to be successful for a period of time. Okay, tactics, minor 5 waves, where we are, right? So I'm going to quickly move forward. Right? She's standing up, really there. All right. Elliott waves is an approach to trading. Okay, it's not counting waves as Mr. Michael Covey had said. It's a whole package. You can count the waves wrong and you can still make money. I've been doing it for the last so many years. Thank you once again. I'll spend 5 minutes answering questions and then I'll leave the floor for the next speaker. Yes, sir.
Just going back to your NIFTY chart which you showed.
Yeah.
Can I have a mic or just voice?
5 minutes only.
Yeah. Hello.
At the bottom.
Hello.
Yeah, I can hear you.
Clear.
I can hear you. I don't know.
Okay, fine. Just going back to the NIFTY chart which you had shown. Just to give an introduction, I'm Shubhodip. I am from Kolkata, and I am one of those guys who put up his hand that I do not believe in Elliott waves.
Right.
So on that angle, 2 questions. You showed a place on the NIFTY where the market came down like this.
Yeah.
You expect it to go up and then fall down.
Yes.
Next, you are showing us the place where it is now. You are expecting a target of 80-80,
Yeah.
where being traders, we should buy something.
This is what I said a week back.
Correct.
Yeah.
My question is 2-part.
Yeah.
One, when it first came down, why am I not buying it there? Because as a trader, if I believed it will go up, I should have bought it there. Point 2, if I had bought it there, am I still holding it? Point 3, if I am buying at 80-80, in none of your trades, there was a stop loss. You are saying it will go up to a 4th wave or some high.
Yeah.
But taking the example of Oak Heart, what if it doesn't work? Futures is not something like Prakash Industries or anything which I can keep in my DP. I have to get out of it. So what is the effect, or do you use a stop loss in any of your trades?
Yeah.
That's my major question.
Yeah.
And if there's a stop loss, then the question of it might go below its previous low doesn't actually come into the picture.
Yeah. I'll give you a very brief answer.
Yeah.
I do use stop loss in my trading positions. I use a wider stop loss on my investing decisions. Every single trade I offer to my clients, there's always a stop loss. But if I don't have a stop loss, I tell them, look, there's no stop loss on this for the time being. But there will be a stop loss soon. Now, in between that day and the day we make the trade, if it falls, if it collapses, then they're going to be...
If it does not collapse, I mean, if I buy and then it collapses. So do I have an idea of a risk reward even before I enter the trade? That's my question.
Every trade needs to have a reasonable reward to the risk you're taking. Otherwise, you shouldn't be trading. Now, I can personally trade for myself without a stop loss in some positions. But when I'm advising others, I always insist that there should be a stop loss.
Okay.
Because it's a trading position. And even if I tell people to be careful about the size they take, they expose themselves, they will blindly go and do a big amount.
Okay.
And I don't want to be responsible for some big financial setback they may have, because what I'm doing is having a framework to trade. I'm not God to make the market stop there.
Okay.
Right? Every trade needs to have a stop. And the way to, if you go to my blog, wavetimes.com, there are hundreds of examples, right? And I have often said, this is where it needs to stop. You need to have a stop loss below this level for these reasons. Of course, you need to have a stop. I'm not mentioning everything about Elliott wave. I'm giving you some ideas on what is important. Where is the myth and where is the reality on using Elliott waves? That's the topic. I hope to be here another day to teach you Elliott waves.
I think we can take 1 or 2 more questions.
Okay.
Yeah.
Can I request you to take one seminar in India, sir?
I can't hear you, sir.
Request you to conduct one seminar, sir. Elliott wave seminar in India.
You're asking me to conduct a seminar. Well, as of now, I'm still working for a bank as a treasury manager. So I'm only selectively accepting such assignments. I cannot be on leave for very long, you know. Otherwise they'll say, we'll find some other treasury manager. Eventually I'll retire and come back to India and I'll have such seminars. Yeah.
Good afternoon, Ramki sir.
Good afternoon.
Most of the books that I have read about waves,
Yeah.
even your ebook that I read, most of them they start with the first wave up. But in case there is a stock which starts its first wave down,
Yeah.
so is there anything which explains that how a stock can start down and then it can continue its 5 waves?
See, I often say, you cannot go back in time, right, to the beginning of a particular stock's IPO. Sometimes it works, sometimes it doesn't. You often see a stock is made an IPO, then it comes down and then starts going up. Even Facebook, it started here, then came down to $18 and now it's, I think, 60, 70, wherever it is. So you'll have downward. But generally speaking, the whole market is only going up. And in the whole progression higher, there will be cycles. It's going to go like this, like that, like that. So you'll have to identify a particular significant low, which is most recent in your time frame for trading. If you're an investor for 5, 6, 10 years, you look at the weekly chart or monthly chart, look at the significant low just preceding where you are now and start counting from there. If it's already coming down, you look at the preceding low and see whether this is a 5-wave move has been completed. And then you're having a correction. And that could be 5 waves up, down as an A wave, then up, another 5 waves down. The whole thing will be the correction. So you have to identify where you are in the big picture by looking at the most recent significant low and count from there. You cannot go 10 years earlier and do that. Will be only theoretical. It might impress some people who are learning Elliott waves, but in the real life of trading, you need to be able to take positions based on what's going to happen next. And that depends on what happened immediately in the recent past.
Thank you.
Good afternoon, sir.
Good afternoon.
I'm Amey Lokhande and I'm an intraday trader. So I usually get in a trade after the 4th wave. Usually after the 3rd wave and the 4th wave, I take the 5th wave up. So I just wanted to know if that is a good strategy or do I need to correct it?
What was the question again? I'm sorry.
I usually enter a trade after the 3rd wave has unfolded
Okay.
and after the 4th trade because it is usually the longest and the most prominent and the steepest. So it gives me an insight that it is the 3rd wave. So is it the right strategy or should I enter the trade in the 3rd wave itself?
Okay. The first thing to know is there's no right or wrong strategy. It's what's your comfort level with what you're following. Second thing is, if you're saying that you'll usually wait for the 3rd wave to finish. The problem with that approach is you never know where the 3rd wave is going to end. Sometimes you will calculate 200% of the first wave as the end of the 3rd wave. It goes to 400%. And then you wait for the 4th wave to happen. And then you're saying you'll buy.
Yes.
But if you switch the whole thing around and say, I want to wait for this full correction to be over, and then I want to catch the next cycle up, that is start trading the end of the 2nd wave for the 3rd wave, that will be a much more profitable strategy because like I did in the first example I showed you, TV18, the stop loss can be at the bottom of wave 1, right? But you have the 3rd wave and the 5th wave there on top. So even if it comes down a little bit, you can wait. Otherwise your count is wrong and it's going to come down to new lows and then it's going to come up.
Yes.
This cushion you don't have if you enter in the fifth wave position. If you enter for the third wave, you have the third wave and the fifth wave up, which you won't have if you enter at the bottom of the fourth wave. You only have the fifth wave left.
We just have space for one last question.
One last question.
What can we take now?
Okay.
Good afternoon, sir. My name is Vipla.
Hi.
Just want to ask you, with your experience, if you see this few commodity charts in the global charts,
Yeah.
for example, CBOT soybean, there you see the big gap downs and big gaps in between because of the contract change and because of the seasonal change.
Yeah.
How do you interpret this type of changes? Like, it is difficult to, give the counts to such type of charts. It's, for example, meal, bean, anything.
As I explained to you while making the presentation, you need to know where we are, right? And the direction of the next trade, next move. If it's going to be down, it's more likely there'll be gaps on the way down, right? Either as a C wave down or as a third wave down. If it's going to go down, you're going to be short. Now, if you pick a top and sell and there's gaps up, then obviously there's something wrong, right? The analysis about where the bottom was wrong. But gaps are bound to happen in the futures market, especially commodities markets, but it's very common. But if you identified the big levels, the big picture correctly, where we are, by looking at the previous significant low, then you'll be all right, I think. I know it's not a satisfactory answer, but you are coming at the fag end of that. Okay, at the end of this presentation, give me the ticker of that chart. Maybe I'll look at it, and tomorrow's discussion, I'll speak about it. Thank you.